We have with us Madhukar Reddy, the MD and CEO at MedPlus, joining in on the show right now. Mr. Reddy, hi, good morning. Great to have you on ET now. I was
Good
just
to be
looking
here.
at your store maturity and store count. Your stores below 2 years age bracket are still in the ramp-up phase and are a drag on the operating EBITDA from what we understand. How is it that you see growth both in terms of numbers and the new stores and when, the maturity would take place?
No, you're right, actually. As per plan and as per our normal this thing, we expect a store to mature anywhere between the 24th to 30th month. While the store breaks even in 6 months, operationally, for it to get to the 10% store level EBITDA, it actually, takes anywhere from 24 to 30. And given that 50% of our overall network is now under 2 years, there is definitely a drag on the overall, bottom line out there for us. But, we see it as investing in growth. We see it as investing in the future. For us, we went to the public to raise money to grow faster. While we are growing fast, we're still a very, very small portion of the overall market, and we feel there's a lot of room for us to grow.
Right. Mr. Reddy, can you help us understand your bigger game plan? Are you on track to achieve it? Because yes, I remember at the time of IPO, you did, share with us the long-term trajectory and the way the category you're operating right now in India is itself in a takeoff phase. The pharmacy and, the online pharmacy and tier 2, tier 3 organized pharmacy business. Are you on track to achieve your 3-year, 5-year targets?
Absolutely. We're probably even growing faster than what we actually said at the IPO time. Slightly faster, I would say. We had said 600 to 700 or 800 stores per year. Now we're at almost 1,000 stores per year. So that's just the growth part out there, right? On the top line and on the EBITDA, things are going as expected. That's all I can tell you right now.
Okay.
But yeah, the strategy for us, yes, is to be, among the top players, have a significant share of the overall market, and have some buying power so that we are able to reduce our buying cost a little bit at least, but have a large share of private label. As our private label share continues to grow, as the brand continues to become bigger, people know us for quality. I hope that many more people will come and buy private label, which is slightly more profitable for us. And that's how we see our growth.
Sure. But for this kind of an aggressive growth strategy, would the IPO proceeds suffice, or would you have to do another round of fundraising?
No, it's unlikely because, with the IPO proceeds, we cleared off all our debts and all. So right now we have zero debt. We are accruing cash. Our growth doesn't mean that we are actually losing money. While the EBITDA is slightly lower, it is that we are not burning cash at any point of time. The plan is to actually get to a level where internal accruals, get us to the growth. I don't see us going to the market to raise equity. We will definitely, top up to get, I would say, a small debt, which is in line with what we had actually put out on the DRHP and all.
Sure. Since you touched upon your private label, I wanted to understand it a little bit better because as of now, your sales form about nearly 14% of the revenues. What are the plans to grow this share, and where is the bigger contribution going to come in from, whether it's going to be pharma or non-pharma?
Right. So yeah, private label is 14, but to understand it a little bit better, it is 8.7 to 8.8 pharma, and the rest is non-pharma, which comprises of hair care, skin care, kind of FMCG products, and a few of the healthcare, I would say health monitoring devices like BP meters, glucometers and all. We expect as we go forward, this 5% which is there in the non-pharma segment could actually end up going to anywhere between 10 to 15% over a long period of time. We're not saying in the next 1 or 2 quarters, but that's where we see the biggest growth. Pharma will grow at the rate of maybe around 100 basis points every year, the pharma private label.
Mr. Reddy, I'm also curious to understand how's your tier 2 and tier 3 city expansion strategy panning out. Because that is where the area, a lot of categories we speak to on the channel every now and then say that the kind of growth tier 2, tier 3 is showing is in fact in many cases double than the tier 1 cities. Which all cities are you present in right now, and what's the roadmap to expand?
So we are primarily in 7 states. We have a large presence in the capitals of all the 7 states out there. But that said, we are also there in 400 small towns. So we're there in almost all district headquarters of the 7 states in which we're there. We are there at even a taluka level for most of the places. For AP and Telangana, we have got roughly around 1,000 stores right now. 400 of them being in Hyderabad, and let's say around 40-50 of them each in Vijayawada and Vizag. But after that, it is all tier 2, tier 3, and tier 4. So we're there even in small towns which are as small as 10,000 population. You're right. Yeah, we have put a lot of emphasis on this. The reason for that is we feel the value proposition which we have, genuine medicines, high quality medicines, and at a price at which no one else can touch, mainly because of the advantages of scale and all, are, the value proposition is even more, I would say, I would say it's even more critical for the tier 2, tier 3 towns, which actually see a lot of fake medicines and where prices are also, drugs are also sold at MRP or near to MRP.
Sure. Help us understand, where is it that you plan to take your diagnostics business as well?
Okay. So diagnostics, as we have said in the past, is a pilot for us right now. We're there in Hyderabad. We have around 6 centers right now. The plan is to actually get to 12 centers. Out of the 12, 4 of them will be large centers with MRI CT, and the rest will basically be only everything else except MRI and CT. So we are not a Me Too diagnostic platform out there. It's a subscription-based platform where people become members, and once they become members, they actually get a 75% discount on all the tests, be it MRI, CT, or even the regular blood tests and all. The plan is for us to actually take a significant chunk of Hyderabad's population and make them members, which will drive, our yearly, the capex expenditure, and which will take care of the capex, and will also continue to actually make us profits as we go forward. Meanwhile, the discount which we give, the 75% discount and the 25% which we collect, we feel is enough to cover the operating costs. So that's the plan. We are on track as of now. Last quarter, I think we reported around 70,000 odd members out there. That continues to grow every quarter. We are on track to actually hit the numbers we wanted. All
right, Mr. Reddy, we'll let you go on that one. Thanks so much for your time this morning. In fact, the gist or takeaway for me from this interaction is that you are ahead of the targeted growth timeline which you had shared with the market at the time of IPO. Let's take a short break on that note.